Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 12th day of July, 2017, and this is the Daily Report for Gold and Silver. Now, for a third consecutive day in a row, we do have higher pricing in the precious metals across the board. Specifically, gold and silver are trading higher, but they've been trading higher with small gains, small steps, as I talked about in today's opening letter. Gold is trading at $12.1950, putting it up roughly $4.80 on the day, roughly a 0.4% gain. It is silver, however, that continues to shine and outperform gold in terms of percentage gain, trading up about 0.9%, settling at 1588.5, which is a net change of about 14 cents on the day. So traders, here we are, day number 3, Wednesday, and also day number 3 in which we have seen consecutively higher pricing in gold. We can see Monday's activity here, Tuesday, and of course today. The overall characteristics, however, at least for Monday and Tuesday, somewhat for today, are the extreme intraday lows achieved and the fact that not only were sellers able to bid the market down, but buyers were able to bring the market back up, buying the dip mentality as well as short covering. Now, we've moved quite a bit in terms of the needle from these lows that were sitting at around 1204 to the intraday highs that we've had at about 1225. So we've got about a $20 range in terms of the market trading off the bottom. And the question you might be asking yourself is, with this type of activity, is there any kind of reason that we haven't issued a buy signal yet? And a lot of it has to do with safety, and the safety stems from the fact that we have seen false breakouts on a number of occasions, although this seems to be a point in which we will most likely see bottom activity occurring. I am simply trying to avoid the kind of action that we saw here that occurred, about the second, third week in July and June, in which the market had come down. We had significant lows made. We also were resting on the 200-day moving average here. We then had some small moves, one small day, two small days, and a decent day, but that was all taken back by this one large candle, red candle. In fact, had this red candle closed below the opening of this one green candle right here, it would have been a 3-line break, and it would have been a very, very bearish signal. As it turns out, the market did continue lower. We also had this false breakout here and to some degree here. And it is for that reason that I want to side with caution at this point. But as I said in our opening statement, that at this point, if we get some kind of follow through tomorrow, that really will break the possibility of this 3-line break here, and that would cause us to issue a buy trigger in gold. And traders, one of the other reasons that I am being a little bit more cautious before signaling the next trade is I absolutely want to see the key reversal, that V, being fully formed before we take a stab at it. We are looking at a weekly chart of gold, and on this weekly chart we can really see the last couple of bottoms that we had in this marketplace and what patterns really developed that would identify or give us some indication that we hit a bottom. Of course, you'll recognize this pretty easy as a variation off a 3-river morning star, without a question of a doubt. On this one, it's a little bit more difficult of a read. You do get an engulfing bullish from this candle to this candle, but the fact that you had a red candle long, a star candle, although it wasn't in the star position, a star size, and then a green candle, it was the fact that the length of this green candle wasn't all that long that wouldn't have given it a strong signal, not like you got right here. Here, in essence, you've got a bullish harami, except that you don't really have a small-bodied candle. For a piercing line, it would have to open below and then close at or above the midpoint. It certainly does this. So this is a variation off a piercing line. This, of course, the last one that we saw is a pretty strong three-river morning star. And what we're getting here on the weekly is a bullish Harami. And of course, a bullish Harami would necessitate that next week we had a pretty sizable move to the upside. In fact, most of these patterns do necessitate that. And that's why we can still be cautious on this trade. We can enter it a little bit later and still get a nice bounce based upon next week's activity, if in fact that's how we see trading activity unfold. And traders, interestingly enough, when we look at silver, which is the chart that I've just pulled up, standard candlestick format, daily chart, a much more extreme low was achieved on Monday if you consider the differential between where this market opened and closed, which is this small rectangle here, and the low, in other words, where they drove the market to. Absolutely no doubt, a lot more volatility, a lot more downside potential, but of course at the same time, the ability to bid that market back up. You also see these three small candles relative to this large red candle, and that shows you that there are very, very similar things at play in silver as well as gold. When we convert it to our weekly chart, we're getting this bullish Harami just as we saw in gold. So traders, obviously we will remain flat today, but we are looking to issue a buy signal. In other markets that we follow, U.S. equities staged a pretty substantial rally today, and the dollar remained pretty much flat. And the interesting thing about that is the fact that we have two very important pieces of fundamental news hitting the wire, so to speak. The first is some political uncertainty due to, again, this whole collusion in Russia thing, along with statements made by the Fed and Janet Yellen speaking in a semi-annual testimony. And what is interesting is the fact that U.S. equities staged a rally means that they really took cues from the Fed, but disregarded comments coming out of the current administration and potential political turmoil, because that, of course, could shake the confidence in U.S. equities and the U.S. economy as a whole. As I said, dollar pretty flat, closing at 95.51. Really not much of a change at all, but it has been U.S. equities. Dow Jones Industrial Average up in triple digits, 21,532. That's our closing price, up about 0.6%. NASDAQ, again, outperforming most of the other indexes. That closing at 62.61, a net change of 1.1%. And lastly, Standard & Poor's 500 up about 0.75%, closing up 17 plus points to close at 24.43. So traders, as far as the dollar is concerned, a small nominal fractional move to the upside today. You can see that with this green candle, but I think that the overall characteristics on this market is a market that is in a basic congestion period, as we have seen in the past. And I also believe that this congestion period is going to be what we see prior to the market moving lower. As I said, I am on record looking for this market to move anywhere between, let's go ahead and kind of compress this, but 95 on the low as $94 on the dollar index. Now, the industrials and equities as a whole really staged a very, very impressive rally. When we take a look at our Dow Jones Industrial Average and our current close, which would be up here, we can see that this current close comes in as a new record high in terms of a closing price, or at least equal to the record highs that we achieved back, middle of June last month here, but we're back in that area once again. Now, when we look at the composite, the NASDAQ composite, we are still quite a ways away from a new record high in the NASDAQ, but realize that the NASDAQ had been moving leaps and bounds above the other indices, and when it came down, of course, it did fall much harder than either the Standard & Poor's or the Dow Jones Industrial Average. Lastly, speaking about the Standard & Poor's, let's go ahead and pull that up. I've just done that. You can see that on the Standard & Poor's, we are also a little bit away from a record top, and the Dow Jones really is the only one of the indices that actually moved to a new record top. I do believe that we have seen equities weather a slight kind of a correction not even really a strong pullback whatsoever. We didn't get any kind of major double-digit percentages in terms of the drawdown. So I am looking for equities to return to rally mode. So traders, as I talked about in our technical studies section of today's report, we are seeing gains in the market, absolutely no doubt. We have seen over the last 3 days a series of higher highs consecutively and a series of higher lows. We've also seen a series of higher closes when we compare it to the open and compare it to the prior day's close. However, the overall characteristic of this market has been small gains, small steps, and we haven't really seen a true conviction, the kind of conviction I would have expected to see as a market comes off a 4-month low, which is exactly what it's doing. And that's what's held me back today from actually issuing a buy signal or buy trigger. My sense is that we have washed out this corrective action that has happened. My sense is that 1200 is the new level of support. Intraday lows at around 1204. If we get a continuity or a continuation tomorrow, I will in fact issue a trade recommendation to enter longs in both gold and silver. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.